Hey everybody, Chuck Barone here. It is Thursday, June the 15th, 2023. Kind of a weird show today because it's only about 12:15 right now. I'm recording the show a little bit earlier. I got to get out of this office here in about 40 minutes or so. So I wouldn't be able to get to the end of the market today. Kind of a weird day, but I got a lot to talk about, so I wanted to make sure I got a video out today. Anyway, let's talk real quick about these markets, where they are right now. This is before the close again. This is around 12:15 Pacific time on Thursday. Stock markets today rocking, having a great day. I think the market digesting the news. Some interesting data today on unemployment, on retail sales. The economy staying tough, man. The economy looking very resilient right now. Not exactly what the Fed wants, but giving the market hope that maybe the Fed can pull this soft landing thing off, I think. The pause cheers the market a little bit. Interestingly, Powell did not give the kind of direct guidance on what the Fed's going to do in the future, at least to the degree he has been over the past year or so. So the market has a little bit of uncertainty there. I think some people in the market believing the Fed is pretty much done with hikes. The Fed signaling yesterday when Powell spoke and in their, what they released, that they expect rates to be about a half a point higher at the end of the year than they are now. But I think the market has a little bit of a doubts on that, and the market rallying nicely today. Bond market rallying too, man. You got big rallies in the 2-year and the 10-year. The 2-year down 7 basis points today, 4.64%. The 3-year, or the 2-year, or the 10-year, the 10-year 3.72%, down 7 basis points also. So the bond market rallying. The dollar getting beat up today, down almost a whole point, 102.11 on the index, sinking fast. I think, the idea of higher rates, holding them higher longer gave the dollar a lot of strength. You had the Fed pausing, and you had the euro today bumping rates. I think that puts a little bit of pressure on the dollar, opposed to the euro especially. So the dollar, not a good day for the dollar today. Metals, I would have thought a bigger rally today on the dollar tanking like it did. Maybe we'll see that tomorrow. Gold, though, does jump $16.30, $1,958.30 for an ounce of gold. Silver actually falls today 5 cents per ounce, $23.84 for an ounce of silver. Oil today, big jump today, $2.34 for a barrel of oil. West Texas Intermediate sitting at $70.61. Right, exactly what I said yesterday. It had broken down under 70. It seems like that 70 to 75 trough is where oil's been comfortable. It might break out above that number, above 75 or below 70 for a short time, but it seems to snap right back into that trading range. And that's exactly what happened today. Bitcoin today down again after a tough day yesterday, down $465 today, 25,467. The market, well, a little bit I did read about Bitcoin in the markets, crypto markets, is that the Fed, this inflation fight, future rate hikes coming, putting pressure on cryptos. They're considering crypto, Bitcoin, and the rest of them more speculative investments. A lot of investors in cryptos would disagree with that classification, but speculative stuff tends to be the one that takes the hit when rates are rising. That tend to be the fastest gainers when rates are falling, right? Now let's talk about news today, because today was a big day, right? So we got the unemployment numbers. The Fed's been working really hard, as I've explained to you guys many, many times ad nauseum. Rising interest rates don't do anything to beat inflation. They don't, okay? What they do is they cause a recession, or at least an economic slowdown, and that slowdown then is what brings prices down as consumers stop purchasing and retailers lower prices to get consumers more interested in the product. Unemployment today coming in, shockingly, 262,000 versus 262,000 last week. Actually, this number was a little higher than they thought. They thought they were going to get about 248,000. So it's pretty interesting that unemployment up a little higher, but not any higher than it was last week. I think that this number is not going to please the Fed. I think they really would like to see it higher than this. We know employment is one of the biggest, the employment market is not employment itself, but the employment market being so hot is one of the big drivers of inflation. Wages have actually been going up for the first time in forever for regular working people. And of course, it's more than being offset with inflation. It's crazy. It seems like everything ganging up to pulverize consumers in this country, right? So anyway, the unemployment numbers today, pretty much a little bit of a surprise to the upside, but I don't think it's upside enough to please the Fed. Retail sales today come out. Retail sales, a big surprise, climbing 0.3% month over month. They were expecting a much smaller gain of 0.1%. I think that consumers, despite high levels of debt, proven themselves amazingly resilient in this market. This month they were buying cars and appliances, higher, bigger ticket items, more durable items. I think this is one of the big reasons Powell sounded so hawkish yesterday. You're seeing the inflation numbers coming down. You got a CPI at 4%. The core number being a little bit higher. You strip out food and energy, which prices are actually been coming down a little bit. Inflation still, I think the core number was 4.9. So not a great number there. Now you add in retail sales rising and employment market still pretty hot. I think that's why you saw the Mr. Frowny Face, St. Jerome looking so unhappy. Now we've been saying it, you guys know this, the Fed wants to slow the economy down to try to bring this inflation number back down to its 2% target. Amazingly, we got the PPI numbers yesterday. PPI actually fell month over month, which is great for the inflation fight because PPI is a forward indicator giving us an idea of where the CPI numbers will land. So we might see some pretty shocking declines in CPI. They can just get the core numbers back under control. I think that this shows the Fed is, or at least seems to be, making real progress on this inflation fight. Now I got to, I've said this before. You got that listen to this show regularly know that I've talked about the last great inflation. I'm old enough to remember it. I was not like a really, mature adult spending a ton of money and being involved in the workforce till the end of it. But I remember it because what my parents went through, and I remember how long it took them to get this fight under control. Now, we did learn a lot of lessons from that. And I think Powell is putting those lessons to work here masterfully. But it took them years to bring the inflation number down, like 12 to 15 years to bring the number back under control. And these were not only, did it take years, but these were painful years, man, with bad economic numbers. You had inflation and unemployment over 10%, 15% mortgages, 25% credit cards. You had stagnant wages. Wages were not going up because of the high unemployment. So everything was a big mess back then. And it still took them years to get it right. If the Fed can get anywhere near their target number by the end of the year, now they're still anticipating a 4% core number toward the end of the year, which is not dramatically lower than where it is. But if they could even get within sniffing distance of their target and do it in 18 months, then you got to give credit where it's due, man. It would just be a masterful job if you could bring it down in 18 months instead of taking long years to do it. Now, 4% inflation or 4% unemployment instead of the 10% we got back then. A recession, bad recession, 10% unemployment. You see that coming up, guys, really? Because I got to tell you, I don't. The recession It seems to be only in particular sectors of our economy. Manufacturing, which has been crap for years, real estate, which has been outrageously sizzling hot, seriously sensitive to interest rates, right? They seem to be the only ones who having any difficulty, as evidenced by retail sales today. You look at Wall Street's profits they're putting out, most companies reporting, the vast majority, have beaten Wall Street's estimates. So if this big, terrible recession is coming, where are the signs? The Fed expects GDP to be up 1% this year. That would not be a great year for GDP, but it would certainly be better than a negative GDP, which would signal the recession, right? So it's fascinating stuff, a crazy time to be alive right now. I'm telling you, your kids and your grandkids are going to read about this time in history books and how the Fed managed it and what they did and whether it was right or wrong. We're living history right now. Now, before I go, just one last quick thing. We had some economists and Elon Musk today coming out screaming bloody murder about the Fed's policies and their actions, saying that now the big scare, what's coming, will not be terrible inflation, but rather deflation. The argument goes like this. With higher interest rates slowing the economy, right? That's part of the equation. The second big part, well, there's several parts, but another big part, let me just qualify it that way, is the money supply, right? So the Fed, we all know, pumped in trillions of dollars during the pandemic COVID, issue. And that, in turn, spiked this inflation we're dealing with today. Well, the Fed has been pretty continually and pretty steadily draining that liquidity out of the money, withdrawing money from, the cash from circulation. And they've been doing it pretty consistently. If you look at M2, you can go right on the Fed website itself and see the M2 numbers. You can see where they went, the big spike, and then the big drop as they're continuing to drain cash out of circulation. I saw a graph today that parallels the money supply numbers with the inflation numbers, and you can see how they've basically been moving hand in hand. So I think that the Fed, the article basically, with the premise of the article I was reading, was saying that, by draining this money supply out, it's a stealth interest rate increase, which gives them a little more flexibility to do the pause like they did today. Like they did yesterday, Anyway, we're getting long-winded here, so let me let you guys go for the day. As always, we appreciate your support more than you guys know. If you like what you're hearing, please hit the like button. It changes the algorithms around on YouTube and gets the video out in front of more people. If you have questions, in the comments section, ask chuckbarone@gmail.com. Your comments, of course, are always welcome. If you haven't already, please subscribe to the channel. Make sure to activate the notifications so you know when we have a new video coming out. We'll be back tomorrow to wrap this week up, kind of get a little bit of perspective on, it's been a big week, man. A lot of stuff from start to finish. We'll kind of do a little bit of our looking into the crystal ball to see what we might be looking at for next week. It's going to be a fascinating finish, man, a crazy finish to this month. Looking forward to seeing what July brings. Anyway, guys, have a great weekend this weekend. This weekend is Father's Day, so make sure to call your dad, take him to lunch, go to a nice golf club, or maybe even just golf balls is a good gift. Enjoy the family, enjoy your time away from the madness. We'll be back tomorrow to wrap the week up, but I'm feeling like it's Friday already. I swear I'm losing track of days here with everything that's been going on. Anyway, guys, that's it for the day. We appreciate you guys. We'll be back tomorrow. Until then, take care. Thanks.